Albert Brenner, People's United Wealth Management Asset Allocation Head. I'm glad you're with us right now. You've got $5 billion in assets. Are you hearing from clients when we see this time and time again? This is the 24th session where we've had triple-digit swings, Albert?
Well, no, we're not. And I have to disagree with Charlie. I don't think all of the rich people, if you say, are heading for the hills at this point. You know, we have our clients fully invested. We act as fiduciaries for them. Done. And we're investors, not traders. And, you know, we think this market offers some opportunity.
Okay. I would agree, because in the rearview mirror, well, I guess way down the road, people may look and say, should have bought on this day early in February. However, the consumer is very tentative right now, yet you're a believer in that consumer. I would point to Michael Kors' earnings today, and all they basically were able to do, and the stock was jumping 18% earlier, was that they had a smaller than expected decline in quarterly sales. That to me isn't that exciting or that positive.
Well, I think the consumer is cautious, but I think we misinterpret that. Caution doesn't necessarily mean that that the economy is fragile. And I've seen a lot of analysts who have interpreted the slow rate of growth as meaning that the economy is fragile. We see it quite different. We think the slow rate of growth represents good caution on the part of the consumer, and yet we think the economy has a significant momentum behind it that would take some really strong headwinds to bring to a stop or to go into a recession.
Well, yeah, just so you know, and we're looking at Michael Kors, that of course is a high-end luxury name. It's jumping 25%. That will be one of the few bright spots today. You are, as you said, in the long term. By the way, Elliot's still with us. Elliot, you steaming here? Albert agrees with you, I think, on some of this, because he feels
I mean, that other guy's entitled to his opinion. I just don't see it. You know,
yeah,
I mean, cheap oil is good. I'm sorry for the guys in the oil industry, but for the rest of us, it's great.
Albert, do you agree with that?
I agree with that, but it's no surprise. I mean, Charlie said that we haven't seen this being translated directly into consumer spending. There is some truth to that. I think consumers are smart. They're waiting to see. Consumers have gone through a real roller coaster with energy prices and with gas prices. And I think the longer we see gas prices in particular at the level that they're at right now, we will see more and more of that savings flow into consumer spending, and will boost the economy going forward.
Now, you've picked a couple of boats that you feel if you get in now, you'll already be lifted when that consumer wakes up. Let's talk about them. You like Visa, you like Alphabet, which is Google. You liked it before it came out with these numbers yesterday. So, and listen, either drink up or drown in your sorrows. You like Constellation Brands.
Yes, we think all of those companies. I think you mentioned Visa. If you didn't, that's our third pick here.
Yeah, you're not picking. Let me just clarify, because we had a wrong ticker symbol up there. You're not picking China Digital TV. You're picking Constellation Brands. Go on.
Thank you. Yes. Those are solid. I mean, what can one say about Alphabet, Google? I mean, it is I think the world utility, and its growth prospects, valuations currently are reasonable. The growth prospects, we think it's a great buy. Constellation, valuations are a little pricier there, but again, strong growth prospects, and we think that's strong too. Great margins. Visa, again, another world play here, world-class competitor in their particular business segment with strong growth potential also.
Listen, the market's down 297 points, 300 points, 340 points over the past about 26 minutes. I'm looking right now, Albert, and people get nervous, especially not so much day to day, but in the aggregate. We were at 17,000. We're now at 16,161 over just a couple of months. What should they make of that besides, buying opportunity?
Well, I think one of the things that people need to really gauge is the extent of the risk exposure in their portfolio relative to their particular objectives, and that's what we're encouraging our clients to do. If they have the right risk objective and the right risk exposure in their portfolio, then we would encourage them to sit tight. If you cannot live with that, though, then you need to be meeting with your advisor your portfolio manager, and restructuring your portfolio.
Oh, yeah. Well, I know a lot of people who can't sleep at night right now because they're very concerned about their 401ks. But Elliot, looking at oil right now, down 5% in the aftermarket session. There is one thing that I hate to agree with Charlie on because I want it to be the other way. But why? Why is the average individual not looking at this drop in oil as a total net 100% win and positive? Is it because maybe they know people in the oil patch who have lost their jobs, or they know it's coming?
It depends on really where they get their news, I would say. I mean, you know, everybody is gonna see any situation from their own point of view, right? So it all really depends on how, I mean, there's people who don't care if it's $4 or if it's $2 a gallon. And I'm like the people who do care, I mean, to sit there and say like they're socking their money away, really? I mean, it's outrageous, really. It's just that they actually have some money to spend for once in their lives. I just don't see it. You
Albert,
know?
in the last couple of seconds here, I don't see you picking an oil name, but are there names that you like right now for your clients?
We do hold Schlumberger in the portfolio right now, but we've been very cautious on oil. A client asked me the other day whether I think there is an equilibrium oil price, and we don't think there is an equilibrium oil price, so we would be underweight those oil companies that are strong in E&P.
Okay, this from the $5 billion man. Albert, great to see you. And Elliot, wonderful to have you.